Well, we'll begin our conversation right now, which is on the Nigerian economy. We've been joined in the studio by Dr. Afolabi Olowookere. To my far left, Dr. Afolabi Olowookere is the head of research and publication at the Financial Derivatives Company Limited. Thank you, Dr. Afolabi Olowookere. And to my immediate left is B.A. Peterside. He is also from the Financial Derivatives Company and is in charge of the assets management, is from the asset management department of the FDC. Thank you, gentlemen, for coming.
Thank you.
On the program. Thank you so much. Now, let's begin. When we talk about inflation, a lot of people out there will wonder what is all about inflation. I'm going to start with BA.
Okay.
What kind of information do you think the Nigerians usually look out for in terms of the inflation figures that has been released? And when we look at the fact that your company also does regular research in terms of the performance of the Nigerian economy, and this time on the inflation rates.
Okay, let's look at it from this angle. Let's say we have two classes of viewers, the informed and the uninformed. The informed individual, the informed individual looks at it in the function of the costs of goods and services. Inflation, just general. Let me put it simply, it means general increase in the price of goods and services. So someone who is informed understands that. So when he hears that, he knows that the cost of doing business is gradually going up. Then from the layman on the street, he asks, how does this boil down to me? Until he actually now sees the impact generally and broadly in terms of when prices of commodities increase, the things he buys and he utilizes daily. That's just those two broad classes of individuals, and I think those two definitions serves them well.
Well, people just want to know how much I have to pay for certain food items in the market, and that for them describes and defines this whole discussion about inflation. Okay, let me go to Dr. Olowookere. When we look at inflation for the previous month, especially the June figure released, it was at 8.2%, and July, we're seeing some kind of projection that it may rise to 8.3%. And if that is the case, if inflation rises to 8.3% for July, that'll be the fifth time monthly consecutive increase was recorded this year. What do you think would have contributed to this rise?
Thank you. I'll talk on the contribution, but I'll start from what he said.
Okay.
I like the question asked about who's concerned about inflation and how does it affect market participants. The consumers are interested because the cost of goods they are buying is increasing. Investors are also interested because when inflation rises, the real return on investment drops. So you can't save your money in a bank when inflation is rising. So everybody is concerned about that. So now we can go back to the movement between 8.2% and 8.3%. When you have increase in inflation, it implies that you are losing your purchasing power. Your investment, the return on investment, real return is also coming down. So investors are interested, consumers are interested. The implication of that, or what could have contributed to that in the Nigerian economy, are so many factors that we have identified as Financial Derivative Company. A major one is the insurgency in the north, because that has a lot of implication on food prices. There are news that a lot of farmers have been displaced, and that has a lot of implication on food prices. And there are elements on imported inflation. Election is coming, there are anticipatory spending. All these have implications on inflation, and they have implications on the purchasing power of people, as well as the real return on investments of investors.
Okay, B.A., I was talking to a stockbroker earlier on, just before you came on board, and he was of the view that foreign investors are on holiday. So perhaps some of them would have taken, or maybe put a hold on investment opportunities or investment practices, as the case may be. Does that in any way trickle into the Nigerian economy in terms of the amount of money that is being put? Like you talked about imported inflation, okay? Apart from the fact that people have to import goods and services that are not produced locally, yes. Does that in any way have any impact on what goes on here?
Yeah, of course it does. Of course it does. The foreign portfolio investors, that's they come in with their funds, and that's additional funds inflow into the Nigerian economy, and it increases the broad money M2, which has been increasing. So that, and when you look at the investment opportunities out there, when they've already, like you said, they've already maxed out on their investments and already seeking for other investment alternatives. And if they don't find them, these funds now have to now start chasing very few investment opportunities out there. So we now have to now see general increases in prices and all that. So that's what that happened. That's how it happens, or that's what it means for the Nigerian economy.
Okay, so talking the issue of empty money, like you talked about, I was just looking at some of your write-ups here, and it says that even though inflation is within the 6.9% target range, it will only be 0.7% lower than the ceiling, and that could be a trend that the central bank governor may consider at the next monetary policy meeting when it comes up next, in terms of the relationship between empty growth and the consumer price inflation. Could you
yes,
talk
when
about
the new
that?
CBN governor came, he made a pledge, or he actually said he's going to actually try and ensure that interest rates come down. But however, given the trend that we've observed, inflation has been increasing for the past 5 months consistently, and now we have the broad money M2 has also increased, and we also expect further increase coming in from the AMCON bonds that's going to be redeemed in a few months' time. That's about 1 trillion naira coming into the economy. So the options for the CBNs are actually cut out for them, because part of their objective is price stability, stable exchange rates, and economic growth. So given given the scenarios in play right now, the CBN is going to have to look at the indicators and actually decide on what tools to use. They might have different tools. They might decide to increase the benchmark rate from 12%, or a further hike in the CR, which
To increase it,
which we don't believe.
even when inflation is rising.
Yes, exactly. So they increase that. The idea behind that is when they increase those rates, now the money supply, liquidity in the system is going to be reduced, because once the benchmark rates goes up, every other rate is expected to go up. So investors can now actually save. It discourages spending, actually save. But however, we don't expect that to be the case in the next monetary policy, as there are other administrative tools that they can use, like increase their OMO operations aggressively to mop up the liquidity in the system. So that's what we expect at the next MPC meeting.
Okay, let me come to Dr. Olowookere. Talking about maintaining price stability and the amount of liquidity in the banking system, we've seen regular treasury bills auction and, of course, bond sales by the federal government to help contain the amount of liquidity, excess liquidity as the case, as is usually called. Does that really yield any form of result in line with the fact that when you have so much money in circulation and you have little to buy with so much money, how do we balance? Does that work out really?
Yeah, I think you've literally defined inflation. Rise in general price level. Some have said it's too much money chasing too few goods. And there is this thing in economics that inflation is a monetary phenomenon. In other words, when you increase money supply, you are most likely going to increase inflation. So what do? You either increase the goods that are in supply, or you reduce the money in the hands of people. So a short-term solution to solving inflation is to reduce liquidity in the system, and that can be done by central bank through its CRR,
various instruments,
CRR,
other monetary policy,
or MPR, whatever it wants to use. So it works because you can reduce the amount of money in circulation by doing whatever you want.
And now if inflation figures that will be released hopefully today by the MBS comes out to be higher, do you expect the central bank to say, okay, maybe we should just tinker with the MPC a little bit, MPR, I mean, a little bit, to help reflect what's going on in the Nigerian economy? Since now we're seeing rising price of food and other items and commodities. Do you think that could be a likely eventuality, even if he had said that, okay, we will only begin to look in the direction of cutting down on interest rate after the general elections? Do you think that could happen before then?
No, we don't think. Given our analysis, we found that most likely CBN will use the open market operation rather than cutting down or reducing MPR. So it's not likely.
Okay, let's look at other issues that were raised in terms of the production of food. Food is very, very important for every Nigerian out there. And even before, apart from the fact that we're trying to take care of the issue of insecurity in the north, we've seen the rains. And about a year ago, the flooding that happened actually affected some part of the country, and that actually led to the increase in food prices. What direction are we going to see that happen again in July when the figures come out? Are we going to see the food prices rise, and what factors could have led to that?
Yeah, we expect to see the food prices rise, not because of whatever will happen in the south, but because of what will happen in the north. And that will contribute a lot to that. And that directly feeds into the headline inflation, and so we expect inflation to rise as a result of increase in food prices, mainly coming from the insurgency in the north.
Okay, BA, let's move on now, because there are a lot of issues here that we need to look at before we go on a break. Exchange rate during this period, what was it like? And what impact would that have on inflation?
When you look at it, comparing the Naira against its peers like South Africa and Ghana, the Naira hasn't done badly. We are just under increased speculation, and the summer holidays, the increased demand for hard currency has put the Naira under pressure. But given this inflation, we don't expect any immediate impacts on the value of the Naira against other currencies. Why? The external reserves are up. We are having favorable oil prices and production levels. So we don't expect any immediate impact on the Naira going forward.
Okay, so there should be no
immediate impact, no cause for alarm,
fear.
no fear. It's just speculation that's going to trigger anything.
All right. I'm so curious about what's going on in Ghana. Of course, we're looking at Nigerian economy, and when we're making comparisons, we look at how our contemporaries are faring. Ghana has been having challenges in terms of its economy, and of course, perhaps the central bank there or the government there would have to do a lot of recalibration to turn around the economy to help, because we've heard that it's going to seek for help from the IMF to help stabilize its economy. But when we compare Nigeria, Ghana, South Africa, and like you said, we're not doing badly, but what are those things that had helped us to really stand out from these other countries?
There's this idea that in Nigeria, we've been able to achieve some macroeconomic stability. Naira has stabilized for some time now. Our exchange rate, our interest rate, we've been able to maintain it at a very, not really too high, but at a reasonable level. And inflation, we have been able to successfully maintain a single digit. So when you look at the macroeconomic environment in Nigeria, we have not done poorly. And that has contributed a lot to the soundness of the economy.
Is it just the monetary policy instruments that helped?
The monetary policy, the central bank has really tried. It has tried in that area. It has also tried in the area of financial stability. The banks are far stronger now than they were before. And I think those things have contributed immensely to the stability macroeconomic in Nigeria.